The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
Bankrupt crypto lender Voyager has defended its $1 billion plan to sell assets to Binance US, according to 2 legal filings posted late Sunday night. And up all night to read them all and to absorb all that information when he could have been easily on an Amtrak train is none other than Global Policy and Regulations Managing Editor Nick Day, who is also the editor of everyone's must-read State of Crypto newsletter. Good morning, Nick. Happy Monday.
Good morning.
So, what do we know about this? You stayed up all night to do this. What exactly is happening?
Yeah, so the background here is, of course, we've talked about Voyager agreeing to sell its assets to Binance, or some assets to Binance for $1.1 billion. And I should clarify, this is Binance US. That filing and that plan received a lot of opposition from entities like state regulators, the U.S. Trustee's Office, which is, of course, part of the U.S. Department of Justice, as well as companies like Alameda Research. The regulators have concerns about whether or not Binance US has all the assets that it claims to, that, it's solvent, basically, to the extent that it can, buy $1.1 billion worth of assets and get that money to Voyager. The issues from companies like Alameda are that, they were concerned that the plan was kind of insufficiently, prepared to make sure Alameda got its investment back. So there were these oppositions filed. The filings from over this weekend, basically, by Voyager are just pushing back on these, concerns and allegations, saying that the amount of information disclosed so far is adequate, that it meets the needs of, investors and customers. It says that, the companies that have, expressed concerns like Alameda, it's not overly concerned about that, but it says that, any companies that have claims are, going to be treated adequately. And what was really interesting to me is that they're kind of pointing to the customer response in its filings. Voyager said that not a single customer has expressed any concerns or opposition to this plan. It's only been regulatory entities and other companies.
They just want their money back.
Pretty much.
Yeah.
All right. Meanwhile, FTX Trading and its affiliate debtors and FTX Digital Markets have announced their agreement on terms for mutual cooperation. Can you tell us anything more about that?
Yeah, so this is where things I think are getting really fascinating. So we've talked a lot about the whole jurisdictional battle that was kind of heating up between the U.S. and the Bahamas. The U.S. bankruptcy proceedings were, ongoing. The Bahamas liquidation proceedings were ongoing, and the managers from each country basically had these concerns with each other. The Bahamas regulators and liquidators said that they were unable to access critical IT data and other information that FTX.com had control of. FTX.com, for its part, said that they didn't trust the Bahamas government or the liquidators appointed by the Bahamas Supreme Court, because they were concerned that they might just try and secure funds solely for Bahamas creditors. And this has been kind of heating up for a while, for months now. And on Friday, the two parties, the liquidators in the Bahamas and the CEO and management in the US, said that they came to an agreement, basically resolving a lot of the issues. They're going to have some joint oversight over, things like asset disposition and making sure that they each have the access that they need. They said they haven't resolved every issue, but this is a pretty big step and should go a long way towards kind of smoothing out the overall process of going from a bankrupt entity to potentially getting investors and customers their money back.
Yeah, well, great to see some cooperation on that front. Perhaps we'll see resolution and creditors can get some money back.